look at third question. Third question is on NPO students. Observe, in June 2024 and September 2024, we have got a question from NPO, same place, 3A, and September 24, 3B. Sorry, 3B. Is it clear, students? Look at summary of receipts and payments of Nature Beauty Society for the year ended 31st March 2024 are as follows. They have given receipts and payments account and additional information. Now what you have to prepare? Look at. You are required to prepare income and expenditure account for the year ended 31st March and balance sheet also. First, do one thing. Prepare income and expenditure account and balance sheet format. Prepare income and expenditure account and balance sheet format. After drawing all the formats, now read the problem first, identify the adjustments and write down the items as it is. So, in the appropriate place. Look at subscription received. Do one thing, for subscription received, always prepare adjustments. That means account. Simple. Now look at subscription received. It is better to prepare subscription received account. Clear, students? Now look at first subscription received 5 lakhs means credit. 5 lakhs credit? Yes. Next one. Donation raised for meeting revenue expenditure means directly you can take it to the income and expenditure account credit side. Income and expenditure account credit side donation. Next one. Interest on investment 9% per annum. Income na, so credit. Next one. Charity show collection receipt, so income 1,25,000. Observe, students. Next one. Payment for medicine supply. Payment for medicine supply, wait. Next one. Honorarium to doctor expense, so debit. Next one. Salaries expense, debit. Next one. Charity show expenses. We received receipts na 1,25,000 minus expenses 10,000. So net amount 1,15,000 as net proceeds from charity show 1,10,000 rupees. Next one. Equipment purchased. This is asset. Show it in the balance sheet. Next, charity show expenses. Sorry, this is sundry expenses. No, this is my mistake. Sundry expenses, debit. Sundry expenses, debit. Next, charity show expenses 15,000 deduct from 1,25,000. 1,25,000 minus 15, 1,10,000 rupees. Clear? Next one. So here, what are the pending amounts? Observe. Pending amounts. Pending amounts are payment of medicine supply and equipment purchased. Except this, remaining all amounts considered. Observe, students. Yes, wait. Now look at additional information. Additional information. Now here capital fund also given, no problem, fine. Here subscription due, opening 15,000, closing 22,000. So first write down closing balance in the closing balance sheet asset side, 22,000. Outstanding subscription. Now the same becomes credit side, 22,000. Current year outstanding. Previous year outstanding, write down on the debit side of subscription account. Is it clear, student? What is the opening entry for this? Subscription account debit to outstanding subscription account. That's why we are writing this entry. Next one. Subscription received in advance, opening 12, closing 7,000. Do one thing. 7,000 rupees first, show it on the liability side of balance sheet. 7,000. Fine. Next one. Same 7,000 rupees again we show on the credit side of subscription received account. What is the entry we record for this? Subscription account debit to subscription received in advance account, 7,000. Simple. Next one. Now come to opening balance, students. Opening balance. For this, what is the opening adjustment entry we record? Previous year, that means before this date, 31st March 2023. What is the entry we have been recorded? Subscription account debit to subscription received in advance. Current year, the same entry becomes reverse. Means subscription received in advance account debit to subscription account, 12,000 rupees. These two are very important, students. Previous year adjustments. Now simply balance subscription account. This is very simple, students. 12,000 plus 5 lakhs plus 22,000 minus 15,000 minus 7,000. So 5 lakh 12,000 rupees relating to current year. 5 lakh 12,000 rupees. Just a minute. You get, students, 5 lakhs 12,000 rupees. 5 lakh 12,000 rupees is the subscription received to be transferred to the income and expenditure account. Important working note this problem. Next one. Observe here, 5 lakh 12,000. They have prepared a statement, student. Statement. Here you can prepare, no problem, account also. Not an issue. Next one. Stock of medicine 1 lakh opening, closing 1 lakh 50. Observe here. Stock of medicine opening balance 1 lakh. Whereas closing balance is 1 lakh 50. This closing balance, show it on the asset side of balance sheet. Simple. Wait. Amount due for medicine supply. Prepare this account also. What is the amount due here? 90,000 credit. Amount due na closing balance. 1 lakh 30, sorry, 90,000 opening balance and 1 lakh 30 closing balance. 1 lakh 30, whatever the closing balance we have, show it on the liability side of balance sheet. Here, next. Now observe how much amount paid for medicine supply, 3 lakhs. Payment means credit side. Here these two are very important, students. These two are interlinked. Now here you can observe total 4 lakh 30. 4 lakh 30 minus 90,000. So that 3 lakh 40,000. 3 lakh 40,000. This 3 lakh 40,000 is transferred to debit side. Means total 4 lakh 40. 4 lakh 40 minus 1 lakh 50. That means 2 lakh 90,000 worth of stock of medicine be consumed. This is shown as an expense. This is shown as an expense in the organization. This is important calculation. That's it. Next one. Value of equipment opening, closing. So it 3 lakhs rupees closing. Observe here. Opening how much we have? 2 lakh 10 plus during the current year how much purchased? 1 lakh 50. 2 lakh 10 opening plus 1 lakh 50 during the year purchased, but 3 lakh 60 total. But whereas at the end of the year how much you have? 3 lakhs, means 60,000 is depreciation on equipment. Yes or no, students? So 60,000 depreciation on equipment. Next one. Building opening 5 lakhs, closing 4 lakh 80. Building opening 5 lakhs, closing 4 lakh 80, means 20,000 depreciated. 20,000. So these things you have to observe. Next one. Cash balance opening 80, closing 90,000. 90,000 like asset side of balance sheet. Simple. Next one. Opening balance of capital fund. Take it to the balance sheet, liability side. That's it, students. Completed. Observe. Now simply balance income and expenditure account. The difference is excess of expenditure over income is deficit. Excess of income over expenditure is surplus. Here we have surplus now. Take this surplus to the capital fund. Now balance the total. Simple, students. Yes, see the observations. In this problem, subscription and these two working notes are very important. Is it clear? Right. Next look at 3B. 3B. A, B and C shared profits and losses in the ratio of 5:3:2. 5:3:2. They took out a joint life policy in 2020 for 50,000. Okay, joint life policy, students. So we have two types of policies now, joint life and separate. A premium of 3,000 being paid annually on 10th June. 10th June we pay. The surrender value of the policy on 31st December of various years was as follows. See, generally in the year of payment, first premium payment nil, 21, 22, 23, fine. A retired on 15th April 2024 and the policy was surrendered. See, in case of retirement, generally what we do, we surrender the policy. But in case of death, we get the full policy amount. But here, what is the case? A retired. You are required to prepare joint life policy account from 20 to 24, assuming the policy. See, we have three methods of treating the premium paid on life insurance policies of partners, whether it is joint life policy or separate life policy. First one, the premium paid is treated as expenditure and that expenditure is transferred to the P&L account. Whenever we receive the premium amount, that is shared among partners. Second, whenever we pay premium, that premium is treated as an asset. Premium paid is treated as an asset. So JLP account is created. Now, this JLP account, see, premium paid minus surrender value. Premium paid minus surrender value means joint life policy they are treating as an asset now. So this asset they are showing in the balance sheet at surrender value. The difference between premium paid and surrender value is treated as loss again, and that loss is transferred to the P&L account. Third method, when JLP is maintained, along with the JLP, we also maintain JLP reserve. But here, what they are maintaining, they are following surrender value basis. That means, first you prepare joint life policy account. What is the entry for payment of policy on 10th June? Joint life policy account debit to bank account. How much, students? 3,000 rupees. At the end of 2020, balance this account. The surrender value is nil. So total amount is transferred to the profit and loss account. This is 2020. Now come to 2021. Again we pay joint life policy 3,000 rupees. Yes or no, students? Yes. At the end of 2021, the premium has surrender value of 900. Means premium paid 3,000, 900 is the surrender value. So total loss is 2,02,100. That is transferred to P&L account. Next one, 22. Okay, this 9,000 is carried. 2022. Again we pay premium of 3,000. But when you surrender policy in 2022, how much amount you get? 2,000 rupees. Debit minus credit. How much? 1,900 is the loss. These amounts we transfer to P&L account. Next year, 2023. How much amount we have? 900. Again 2023 we pay 3,000 rupees. Okay. Surrender value is how much? 3,600. What is the loss here? 1,400. Yes or no, students? Yeah. So for the year 2024, what is the surrender value here? 3,600. Now A retired on 15th April. That means you need not to pay any premium in the year 2024 because premium due date is 10th June. But he retired on 15th April. So in 2024, you need not to pay anything. Now assume this policy is surrendered. How much amount you get? 3,600. When we maintain joint life policy account based on surrender value, what we do in the JLP account, if you have any balance, that balance is treated as profit and that profit is shared among partners. But here we are maintaining JLP at surrender value and also we received surrender value. Here there is no profit on JLP. That's why generally here no need to distribute anything to the partners. This is JLP account. That's it. Very simple, students. You can score easily 5 marks. If you get this type of problem, you can score easily 5 marks. Observe carefully. Only thing you have to prepare joint life policy account. So here clerical work is more. Next one. 3C. Mr. Nikhil gives the following particulars in respect of business carried on by him. Fine. Capital invested 9 lakhs. Market rate of interest on investment and rate of risk return on capital invested in business. What is the meaning of this? Suppose without investing this same 9 lakhs rupee, if I invest in the market, so I will get easily 8% return without any risk. But this 9 lakh rupee, now I am investing in the business, so that I have to earn more than 8%. Now, minimum to minimum, I have to earn more than 8% rupees. So for taking this risk, how much return I have to earn extra? 3%. So total, what is the rate of return I have to earn? Minimum to minimum 11%. Minimum to minimum I have to earn 11%. Next, remuneration per annum from alternative employment of proprietor if he was not engaged in business, means opportunity cost. Suppose I am investing my whole time in the business. Yes or no? So if I invest the same time outside my business without starting the business, if I go for employment, how much amount I can earn? 36,000 rupees. Means out of my profits, first what I have to do, I have to deduct 36,000 rupees. Remaining amount earned from business. Because if I do job, I can earn anyway 36,000 now. If I earn more than 36,000 rupees, then that extra amount is only my profit. To remember. Next one. The business earned profits of 2,40,000, 2,16,000 and 3 lakhs in the years 20, 21, 23. Fine. Respectively, but made a loss of 36,000 in the year 22. Fine. Compute the value of goodwill. Yeah, is valuation of goodwill, students. So for valuation of goodwill, we have three methods, no? Four methods, whatever you call. One is average profit method. Next one is super profit method. Next one is annuity method. Next one is capitalization of profits method. Is it clear? So value of goodwill on the basis of 6 years purchase of super profit of the business calculated on the basis of average profit of last 4 years. So here they are asking super profit method, means first step, goodwill. First, what is the formula for goodwill under this method, students? Goodwill is equal to super profit into number of years of purchase. Now, calculate super profit. How super profit is calculated? Simple. Average profit minus normal profit. Average profit means your business profit. Average profit means your business profit. Normal profit means normally in each industry we earn normal profit. That means I have invested 9 lakh rupee in the business. On that, generally how much percentage I have to earn? 11%. That is my normal profit. Is it clear, students? Yes. So first we try to calculate average profit, after that normal profit. The difference between average profit and normal profit is nothing but super profit, and super profit is multiplied with number of years. This is the problem, student. Now look at, first calculate average profit. Nothing but first calculate total profit. Total profit. Simple. 2,40,000 plus 2,16,000 plus 3 lakhs minus 1 year we have a loss 36,000. Total 7,20,000, students. 7,20,000 divided by how many years? 4 years. Minus 4 divided by 4 divided by 4. So 1,80,000. 1,80,000 minus, from this I have to deduct my opportunity cost of 36,000 rupees. If I engage in any business, sorry, in any employment, I can earn 36,000 rupees as my salary. So what is the average profit? 1,44,000 rupees. Observe here. Just a minute. This is total profit. Average profit 7,20,000 divided by 4. 1,80,000. 1,80,000 minus what we are doing? We are deducting that remuneration, normal profit. Okay. So 1,80,000 is our average profit. Just a minute. All correction. This is our average profit, student. Now, normal profit, how do we calculate? Simple. Look at first. This is our total profit. Total profit. Now, normal profit, how do we calculate? On 9 lakhs. On 9 lakhs, simply calculate 11%. 99,000. Remuneration for the proprietor 36,000 rupees. And remaining is nothing but normal profit. This much of normal profit I have to earn. On 9 lakh, I have to earn 11% plus my alternative employment, from my alternative employment, I am earning 36,000. This is called normal profit. So from 1,80,000 deduct 1,35,000. So how much you get? 45,000 rupees super profit. And this super profit is multiplied with 6. So that 2,70,000. This is goodwill valuation, student. Super profit method. Next one. 4A. Look at question number 4, students. The balance sheet of partnership firm Mrs. Dutch and Associates consisted of two partners P and Q who were sharing profits and losses in the ratio of 5:3. Okay. The position as on 31st March 2024 was as follows. Fine. P capital, Q capital, P and L account balance, trade creditors, land and building, plant and machinery, furniture, stock, debtors, bank. Fine. On the above date, R was admitted as a partner on the following terms. It is admission of partner, na students. In case of admission of partner, we have to do certain adjustments. Na? First one, calculate new profit sharing ratio. After that, goodwill adjustment. After that, revaluation of assets and liabilities. After that, distribution of general reserve and other P&L account balance or loss, profits or losses, and capital adjustment. Now, R brought 2,40,000. Sorry, R should get 1/5 share of profits. So R will get 1/5 share of profit. Means remaining 4/5 profit, who will take? Remaining partners. Fine. R brought 2,40,000 as his capital and 32,000 for his share of goodwill. That means he is bringing 2,40,000 capital plus 32,000 goodwill. Plant and machinery would be depreciated by 15% and land building would be appreciated by 40%. Simple. Next, a provision for doubtful debts to be created at 5% on sundry debtors. Fine. An unrecorded liability of 6,000 for repairs to building would be recorded in the books of accounts. Fine. Immediately after R's admission, goodwill brought by him would be adjusted among old partners. Anyway, we do this adjustment. Thereafter, the capital accounts of old partners would be adjusted through the current accounts of partners in such a manner that the capital accounts of all the partners would be in their profit sharing ratio. This is very, very important adjustment, student. This is nothing but capital adjustment. This is nothing but capital adjustment. Prepare revaluation account, capital accounts of partners, new profit sharing ratio and balance sheet of the firm after the admission of R. Observe, students. Here, first prepare revaluation account, capital account and balance sheet of the firm. Next, R admission. Okay, he admitted. Fine. Now, when you get this type of problem in the exam, try to solve like this. Simple. First one. We have drawn all the formats now. Revaluation account, partners capital account and balance sheet. Now look at. First, P capital, Q capital. Show it in the balance sheet. Show it in the balance sheet as opening balances. Over. Next one. Profit and loss account balance. Distribute among partners. Entry. Profit and loss account debit to partners capital account. 1,12,000 rupees is distributed in 5:3 ratio. Okay, distribute 1,12,000 into 5/8, 70,000 and 42,000. Next one, trade creditors. There is no change in the trade creditors now. So show trade creditors as it is in the balance sheet. 54,800 as it is. Next, come to asset side. So land and building, plant and machinery, furniture, stock, debtors, cash at bank. Bank account we open separately. Bank account we open separately. Here I will open bank account. Observe here. You people better to open bank account, student. So bank balance how much? 42,060. 42,060. Next one. Write down all the assets. Land and building 3,80,000. Inner column first. Plant and machinery 170. Furniture, debtors, stock, furniture. If there is no change in the any asset balance, then write down that asset amount directly. You get furniture, stock. There is no change. So furniture, stock. Remaining assets we have change. That's why first write down the amounts in inner column. For this you have to mark which assets has been changed and which asset not changed. Now, next step. After completing the balance sheet, go to the next step. R will get 1/5 profit. Here calculate new profit sharing ratio. How? R will get 1/5. Now, let the total share be 1. Let the total share be 1 minus how much R is getting 1 by 5. What is the remaining share? 4 by 5. This is taken by whom? A. In which ratio A and B? Both will take A and B. How A and B will take in their old profit sharing ratio. So A will get out of 4 by 5, A will get 5 by 8. Out of 4 by 5, B will get 3 by 8. You get 20 by 40. 12 by 40. 20 is to 12. Here 1 by 5. C 1 by 5. To equal denominator multiply 8 by 8. So 8 by 40. So what is the new profit sharing ratio? 20 is to 12 is to 8. Means 5 is to 3 is to 2. This is a new profit sharing ratio. They said to calculate new profit sharing ratio. Now calculate sacrificing ratio. Sacrificing ratio formula old ratio minus new ratio. If you calculate old ratio minus new ratio, you get same 5 is to 3 students. Get same 5 is to 3. You can calculate simply. Now look at. Now goodwill, whatever the goodwill he brought, this is shared between P and Q in 5 is to 3 ratio. For this, what is the adjustment entry we record? R capital account debit to P capital account to Q capital account. How much? 32,000 into 5 by 8. 20,000. So 20,000 and 12,000. Observe. Yes. R capital account debit to P capital to Q capital. Here 20, 12. Is it clear, students? Now, how much amount are bringing 2,40,000 plus 32? Total 2,72,000. For this, what is the entry we record? Bank account debit to R capital 2,72,000. So bank balance increased by how much? 2,72,000. Is it clear, students? Next one. Yeah, plant and machinery would be depreciated by 15%, revaluation debit. Land and building appreciated by 40%, revaluation credit. Now this depreciation and appreciation show in the balance sheet also. Simple. Next one. Provision for doubtful debts is to be created. Again, decrease in the value of asset. Revaluation account debit 5%. Balance sheet from sundry debtors deduct this 5%. Unrecorded liabilities 6,000 rupees for repairs of building. So revaluation account debit 6,000. Again, show it in the on the liability side of balance sheet 6,000. Next one. That's it. All adjustments have been completed except capital adjustment. Before that, calculate revaluation profit or loss. Distribute to partners. Over. After that, come to partners capital account. Here we need to adjust capitals. For that, first calculate what is total capital. Observe here total capital of the firm can be calculated based on R capital, students. So R brought 2,40,000 rupees for how much share? 1 by 5 share. R brought 2,40,000 rupees capital for 1 by 5 share. 1 by 5 share. Now observe what is the full share? Full share 2,40,000 into 5. 12 lakhs. This is the total capital. This capital must be in accordance to 5:3:2 ratio. Means 12 lakhs into 5 by 10. 6 lakhs. 12 lakhs into 3 by 10. 3 lakh 60 and 2 lakh 40. Now calculate excess capitals or short capitals. Calculate excess capital or short capital, and excess capital or short capital can be adjusted through current accounts. Is it clear? Now this current account balance and capital account balance show it on the liability side of balance sheet. Observe. If current account is showing debit balance, liability side, asset side. If it is showing credit balance, liabilities side. Clear, students? Now balance sheet total. This is our admission of partner. Hope you understood. Next one. 4B. Samir distributors are carrying on the retail business of electrical goods. Okay. They keep their books of account under single entry system. Incomplete records, students. The balance sheet as on 31st March 2023 was as follows. Observe. Capital, trade, creditors, salary, payable. Motor vehicle, furniture, stock in trade, trade debtors, 6% investments, cash in hand and at bank. Together 20,67,600. Next. The summary of cash and bank book for the year ended 31st March 2024 was given below. So they have already given summary of cash book. Look at opening balance, cash sales, receipts from trade debtors, interest on investment. Fine. Cash purchase, payment to creditors, salaries, rent and taxes, sundry expenses, drawings, closing balance of cash. Additional information, look at gross profit ratio 12.5% of sales and maintained throughout the year. Fine. During the year, discount allowed to trade debtors was 1,87,500 and discount received from creditors 1,05,000. Fine. As on 31st March 2024, the closing balance to trade creditors and trade debtors and creditors 661,500 and 316,800. Fine. On 31st March 2024, an amount of 44,400 outstanding towards salary. Here, if you observe, when you are solving incomplete records problem, na, so every information is useful for us. Each information is useful for us, and each information is recorded in two places. Most of the information is recorded in two places, students. To remember, depreciation at 10% per annum to be charged on motor vehicle and furniture. Depreciation at 10% per annum to be charged on motor vehicle and furniture. Okay, you are required to prepare trading and profit and loss account for the year ended 31st March 2024 and a balance sheet on that date. Here, first prepare trading account format. After that, a P&L account format. After that, balance sheet format. Now, apart from that, prepare creditors account and debtors account. Debtors account. Clear, students? Yes. Now, start problem from the beginning. First one, we have capital. First one, we have capital. Capital, show it on the liability side of balance sheet. So, you have to follow one order, student. You follow one order, na, then you can complete the problem. Next one, trade creditors. Creditor account we have opened, na, so opening balance 225,600. Next one, sundry salary payable. This salary we pay during the year, na, so we deduct from salary. Yeah, here they have given salary to be charged, so salary is deducted 27,000. Next one, so liability side completed. Now come to asset side. Motor vehicle 3,30,000 rupees. Now observe, is there any motor vehicle purchased during the year? No. Sold during the year? No. Depreciation? Yes. On the 10% motor vehicle depreciation, 3 lakhs into 10%, 30,000. Show it on the debit side of P&L account. Debit side of P&L account. Look at depreciation. Just a minute. So motor vehicle is 3,30,000 and furniture is 2,20,500. On that you calculate 10% depreciation, student. So that depreciation is transferred to P&L account 33,000 and 22,050. Now after deduction of depreciation, show the remaining amounts of motor vehicle and furniture in the balance sheet. Over. Next one, stock in trade. This is opening stock. Show it on the debit side of trading account. Opening stock. Over. Next one, trade debtors. Debtors account opening balance. Okay. Next one, 6% investments. Look at whether any investments are sold or not. If any investments are not sold or purchased, show the same investments amount in the balance sheet. Is it clear? So with cash and bank account, already this balance is shown in the cash book receipt side. Over. With this, the existing balance sheet is completed. With this, the existing balance sheet gets completed. Next, cash sales. Cash sales, trading account to credit side. Cash sales, trading account to credit side. Sales consist of cash plus credit. Next one, payment to trade creditors. So, trade creditors account, debit side. Trade creditors account, debit side, students. Observe. Over. Next one. Uh, yeah. Just a minute. Just a minute. Cash sales completed. Okay. Receipts from trade debtors. Receipts from trade debtors. First, we see trade debtors. No? Fine. Trade debtors. So, debtors account, credit side. Over. Next one. Interest on investment. Interest on investment is income. No? Here you have investments 1,80,000 and 6%. Calculate 1 year interest on investment. So 1,80,000 into 6%, 10,800. So we also received 10,800. We also received 10,800. So P and L account, credit side, 10,800. Over. Next one. Come to credit side. Credit purchases. Sorry, cash purchases. So trading account, debit. Cash purchases. Next one. Creditors, payment to creditors account to debit side. Next one, salaries, expense. Na? So here we have adjustment. Total salaries paid this much. Out of them, previous year salary 27, remaining salary 12,11,400. Wait. Next one, rent and taxes. No adjustment, so that go to P&L account, debit side. Rent and taxes, same amount. Next one, sundry expenses, P&L account, debit. No adjustment. Na? Next, drawings, deduct from capital. So drawings, deduct from capital, 7,20,000. Next one, closing balance of bank. Show it on the asset side of balance sheet. Show it on the assets side of balance sheet, 5,13,900. Over. Next one, additional information. Look at gross profit ratio. They have said 12.5% on sales is maintained throughout the year. See, first we calculate total sales. Total sales nothing but cash sales plus credit sales. Total 12.5% is the gross profit ratio. Fine. During the year, discount allowed to trade debtors was 1,87,500. First, write down this in the trade debtors account, debit side, sorry, credit side, and profit and loss account, debit side. Discount allowed. Next one. Trade discount received. First, creditors account, debit side, creditors account, debit side. At the same time, P&L account, credit. P&L account, credit. Observe, students. This is how we have to solve the problem. P&L account, credit. Two places. Next one. The closing balances of trade debtors and creditors. Closing balances they have given. First, closing balances show in the working notes. After that, in the balance sheet. Okay. Next one. On 31st March 2024, an amount of 44,400 was outstanding towards salary. Still outstanding. So show it on the liability side, students. First, liability side, 44,400. Next, adjustment, add. So total salary, show it on the debit side of P&L account. Next one, depreciation completed. So each information we have taken. Now, first close one by one account. Salary working note is completed. Now come to trade debtors account. Debit minus credit. Closing balance also written. The difference is nothing but purchases. Credit sales. This credit sales is shown on the credit side. Then you get total sales. Total sales. If you observe in the entire problem, closing stock not given. Closing stock we have to calculate. They said 12.5% is the gross profit on sales. So here sales are 2 crore 91 lakh 36,000. On that you calculate 12.5%, you get gross profit. And observe trade creditors account. Debit side, credit side, opening balance. Debit side, cash paid, discount received, closing balance. Difference is nothing but purchases. Difference is nothing but purchases. Observe carefully. Now, that purchase amount, write down balance sheet, sorry, trading account, debit side. So, now observe trading account. Opening balance, purchases, gross profit, minus sales, nothing but your closing stock. And this closing stock is taken to the assets side of balance sheet. Clear? Now P&L account balance, you get net profit, and this net profit is added to the capital, so that this is the total of balance sheet. Is it clear, students? Next.